There's some hoes in this house. There's some in this house. In this house. There's some in this house. In this house. There's some hoes in this house. In this house. There's some in this house.
I want to cover something that is happening right now under this administration that was picked up on by a Wall Street Journal opinion column writer or whatever. Home prices are soaring thanks to inflation and other government policies, so what to do? The Biden administration's answer is apparently to make home loans more affordable for the paupers in Nantucket and Palo Alto by guaranteeing mortgages up to $1 million. The Journal reported Tuesday that government-sponsored enterprises Fannie Mae and Freddie Mac, those are the government entities that back mortgages. They are federally backed mortgages. They get that government guarantee. They raised their conforming loan limits to about $650,000 from $548,250. That's, about $100,000 increase. And nearly $1 million in high-cost markets like Palo Alto, for example. That is a nearly $200,000 increase from $822,375. That's to keep pace with inflation and housing prices, which were up 23% in the second quarter year over year. Even with the surge in housing prices, the median price of an existing U.S. home is only $363,700. Now, I don't mean to be nitpicky, but that has since increased to just short of $400,000 due to, I believe, Zillow purchasing nearly $6,000 above market rate price that had upward pressure applied to the market that inevitably raised the median value of all housing units on the mortgage side of the real estate market. Anyway, raising the loan limit to $1 million will mainly assist buyers in places like Santa Clara, Potomac, Maryland, and New York counties where the median home is worth about $1.2 million, according to the National Association of Realtors. Buyers in these areas are paying more for homes and getting less than in the rest of the country, but blame government zoning and other policies that restrict supply. The solution is for local governments to encourage more housing development, not for the feds to prop up demand for high-end homes. Well-to-do Americans in high-cost areas can still get a non-federally guaranteed jumbo mortgage at ultra-low rates, though they may have to make a bigger down payment. According to Bankrate, the average mortgage rate for a 30-year jumbo loan is at 3.05%, roughly the same as a fixed 30-year average mortgage. The average 30-year fixed mortgage rate is about 150 basis points lower than a few years ago and half of what it was in 2007. Thank the Federal Reserve, which has maintained real negative interest rates and has been buying $40 billion of mortgage-backed securities per month during the pandemic. But what the Fed giveth in lower rates, it taketh in higher home prices that reduce affordability. Fannie and Freddie are supervised by the Federal Housing Finance Agency, so the conforming loan increase would need its regulatory approval. In September, the FHFA also suspended the Trump administration's portfolio limits on GSE, that's government-sponsored enterprises, acquisitions of second home and investment property mortgages, providing another subsidy for the affluent. The number of second homes purchased in September was 53% higher than during the same month in 2019 and 63% higher for investment properties, according to American Enterprise Institute fellow Ed Pinto. Second home buyers and investors chasing higher yields are competing with upper middle income Americans, which is pushing up prices even more. If all this sounds eerily familiar, it should. In the 2000s, federal loan subsidies and low interest rates fed a housing mania that ended in panic and a crash. Taxpayers had to rescue Fannie and Freddie to the tune of $190 billion. Here we go again. Question? Basically, what we are seeing in response to inflation is government-sponsored entities or enterprises moving forward and raising the amount of a loan that they will back through the FHA to try to incentivize more well-to-do first-time home buyers, because it's limited to only first-time home buyers, to take on more debt in the form of a mortgage, because there's upward pressure that is applied right now to the entire housing market, but it is targeting areas that are incredibly expensive anyway, well over the median value of a home in most cases. Now, understandably so, we do need to address the real elephant in the room, and that is the fact that institutional investors right now are trying to take over both of our markets, the owner's market and the rentals market. We have seen Zillow attempt to buy up as many homes that were on the homeowners market specifically for the purposes of converting them to the rental side of the market, either by maybe creating a new subsidiary, holding on to those assets, maintaining their portfolio, making that conversion, and doing what has been done thus far with Blackstone and Invitation Homes and some of the other institutional investors that now own and operate their own portfolios or have their own real estate companies, specifically for single-family rental units. To assume that the reason why we have a shortage in housing construction is due to, limitations that are applied by local governments, either zoning code or building requirements, I think that's a scapegoat, and we need to look past the reality of how local governments and their zoning codes are restricting any new construction. Because here's the thing. The government's not moving forward with fronting the costs of new construction, specifically residential construction. They rely on the market to make these decisions. And if it's going to be too costly, or the return on their investment to increase housing stock, either in the rental or the mortgage market, makes it less likely that the shareholders who would be investing into a new property, the stakeholders who would also be holding on to the risk and spreading the risk of the cost to begin the projects doesn't seem promising, then nobody is going to take on that risk of building more housing if there is not a guarantee that they will reap the benefits. And right now, because we know we are on the precipice of what could be another housing crash, nobody's jumping to invest in new construction for housing at all. Right now, we're seeing a shortage in the mortgage market because the big players that were going in and buying those existing homes that were on the market with cash, they've kind of backed off. They've kind of cooled down. We still have a housing market with some vacancies. That means it's not a complete and total real estate takeover by corporate investors. And that is precisely why the Biden administration has probably upped the ante for those well-to-do first-time home buyers to be able to feel as though they can take out a loan if they do so choose. Now that institutional investors are kind of backing off, there are still some opportunities to take out a mortgage in some high-priced areas, and paving the way for them to do so is only going to benefit those who are not necessarily struggling right now and not necessarily in dire need of basic necessities like secured roofs over their head, like what the government was temporarily offering with the eviction moratorium. It goes back to what the Democratic Party is really prioritizing right now. And it is not low-income tenants who are still at risk for eviction, because we have not seen the benefit of the rental assistance programs. Only about 6% of ERA money have been doled out. That's only a couple $2 billion that have allowed people to stay sheltered in place or make good on their outstanding rent that they owed their landlord. Meanwhile, rest assured, if you were thinking about maybe taking out a mortgage in Irvine, California, but Maybe you were also worried that you were going to have to be hit with a high interest rate in a few months because the Fed was going to increase interest rates to try to, stabilize these markets. A very common mechanism used by the Federal Reserve to try to ameliorate the increased costs in a given market due to inflation. Then maybe they were thinking, it's not a good time for me to buy. But with this guarantee that now Fannie and Freddie are offering a jumbo loan of up to $1 million in some cases, maybe it's not as risky as of an investment as they were thinking. And that's about what percentage of the population is really thinking about whether or not they should move forward right now and take out $1 million mortgage. So who is this really benefiting? This is just another example of some sort of incentive or some sort of break for the incredibly rich. This is not happening under a Republican administration. It's happening under the Biden administration. So literally Biden was correct. Nothing will fundamentally change.
There's some hoes in this fall. There's some in this fall. In this fall. There's some in this fall. In this fall. There's some hoes in this fall. In this fall. There's some in this fall. In this.
I'm a killer when I get in